Hi, everyone. Today, let's talk about the CPI report. And then we got some charts to go over. And then we'll look at my results for the day and my thoughts going into tomorrow. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day, so make sure you hit the bell so you don't miss out on any future videos. Welcome to the Portfolio Bulletin. Let's get started. So CPI was much better than expected, and all of the stock markets rose. You can see here stock markets across the world went up. The European stock market went up 1.1%, British pound rallied. But the big news here is that CPI came in at 7.1%, 0.2% lower than expectations, meaning that the CPI for this month was 0.1%, 0.2% below the expectation of 0.3%. Going into a little bit more detail here, you can see it's still well above the 2% target, but we are trending down pretty dramatically. The high was still June at 9%, and core CPI had its high in September, but it's ticking down now as well. As a result of this, stocks were up quite a bit, just like in the international markets. They really sold off throughout the day, and we'll take a closer look at that on the charts. It is worth noting here that shelter costs, which make up 1/3 of CPI weighting, continued to escalate at 0.6%, now up 7.1% on an annual basis. And average hourly earnings rose 0.5% this month, but that's still down 1.9% from a year ago. They mention here the Fed could disregard this better than expectation report and still continue to be pretty aggressive. I'm still expecting 50 basis points, which is what they've been reiterating multiple times. I don't think they're going to go down to 25 basis points, in my opinion. And moving over to some other sectors, you can see used vehicle prices fell by 2.9%. Medical costs also decreased by 0.7%. And then they reiterate that peak CPI was in June. And since then, we have been downtrending fairly well. Moving over to the charts, starting with the S&Ps. On the hourly chart, you can see big gap up to start the day. The CPI report came out soon after, pushed the markets all the way up to $414. And then throughout the day, it sold off. For the next 4 hours, we sold off all the way down, filling the gap actually, and then continuing upwards just a little bit, closing at about 1% up on the day. Pretty hectic trading. Hopefully you made a little bit of money somewhere. If you're long going into the day, hopefully you took profits early. And if you were short for the first 4 hours, you definitely made money. And there was even potential for a little bit of a rebound trade from 11 to 12, and then a bounce here again at 1400 into the close of day. Moving over to the NASDAQ on the 15-minute chart to get a little bit closer look of what that looked like. I did most of my trading on the NASDAQ today, and I was short for most of the first 2 hours. I did get a couple of long trades in here. I did short in here as well from 13 to 14, and then I did get a little bit long just for a few minutes into the close. I really only traded options a little bit here in the beginning of the day. On this first initial dip, I sold some 295s, closed those pretty early as I saw this was starting to fail, and then sold short for the next couple hours, and then just a couple of bullish and bearish trades throughout the day. But right now, I am still neutral. I have no positions going into the FOMC meeting tomorrow. Moving over to the 4-hour chart, you can see we did touch that resistance that we failed to do here in December on the NASDAQ. So we touched that previous high, the resistance point several times, this resistance point, which included several trend lines, and then sold off throughout the day. So you could certainly think that this is an opportunity for the markets to take out a bunch of liquidity here to the upside before selling off. But of course, right now, this still is in a bullish structure, and we have to assume that this can go either way at this point, in my opinion. In terms of prices, there's certainly some support down here at 281.50, and then I would assume there's still resistance up here at 293, 294 in this zone. If we come back in here without CPI or any kind of news, I would assume we're going to sell off. I'm still not sold on the idea that we're going to break through this resistance at this point. I think we're going to move down and make a higher low versus the October lows. Moving over to the Russell, this looks quite a bit weaker. The CPI spike did take out several of these trend lines, finding some liquidity to the downside, but we did not take out this previous high that we touched on the other two major indices, and this still looks like it's going to roll over in my opinion. So the weakest of the three is the Russell, and surprisingly, the strongest right now is the NASDAQ. Moving over to XLK, this looks like a pretty good trade at this point. You can see the big gap up, did fill the gap, and then rallied quite a bit into the end of day. This definitely looks like a breakout here now in my opinion. Jumping out to the 1 day so you can see what this looks like. We had the break the previous day. CPI kind of confirmed that this trend is now pushing through that zone. Zooming out now, you can see this trend looks like it's breaking through resistance, and that we could potentially see a push back up to this previous high somewhere in the 151, 152 area. So technology sector looking strong. Even on the MACD, on the daily chart here, you can see downward momentum is fading, and it looks like we're going to turn positive here in the next day or two. Moving over to IYT on the daily chart, similar story. It does look like we're kind of breaking out, coming back and retesting this zone right at that 226.50 level. If this holds here tomorrow and we get a continuation to the upside, that's certainly potential to say that this zone is no longer resistance and that it's becoming support, and that we should be expecting the markets to continue higher and potentially retest the highs here from August. Moving over to XLP. XLP actually already came up and tested the August highs, and at this point it is meeting resistance. You have to assume that this is going to sell off. It actually was red on the day, so it sold off throughout the day after the big gap up, and momentum here is starting to grow to the downside, so I would expect this to move down. Again, I don't think we're going to move all the way to the previous lows. I think we find some support in the mid-range. We've talked about it before, but somewhere in this 72.50 zone, I think would be a solid buying opportunity. But right now, we just look extended to the upside. Also, looking at the RSI here, you can see we have clear divergence. We're at the same price level that we've been at for the last few days, but the RSI is getting weaker here, and the trend for RSI is to the downside as well. Moving over to XLP, it continues to show life here. We did not get up into the zone that I thought we would find resistance. That's still sitting up here at 145, 146. So we didn't quite make it that far. I do expect that we will get up to there at some point. We were pretty oversold, as we've talked about before, and we have growing positive momentum here on the 4-hour. Should expect this to rally back into this zone. It might be a little choppy along the way, but I do think we're going to get back up. And then once we get back up into this zone, I would expect this to continue to the downside. So we have that first push, that first retrace, and then I would expect it to roll over and come back down to around that 25 zone that we've talked about before as well. That would also allow us to fill this gap that has been sitting here since September, and you have to expect that's where XOP is going to go ultimately. Moving over to top gainers for the day, we have NVDA, gapped up like everything else, but we held up quite a bit. Went from 175 up to 180.72 at the close here. Jumping down to the 4-hour to see a little bit closer what that looks like. Looks very strong. This trend is well intact. Continues to make higher highs and higher lows here. And you have to expect that this is going to go higher. Going out to the daily chart in terms of resistance, I would expect the previous highs here in August to be resistance, sitting around 191, so about $10 or so of more upside potential before we have any serious resistance in my opinion. Also looking at the MACD here, you can see we have big green momentum, had a little bit of red momentum, so we're swinging to the green side here. That looks strong. It's worth noting that we were pretty extended on the EMAs on the MACD, and we are pretty close to overbought conditions on the daily chart. So that's definitely something to pay attention to. And it also makes sense that we would only have about $10 more of upside here before we hit that major resistance, which would get us into that overbought condition. Also for top gainers, we have GDX. We've been talking about this one a little bit here, but we did gap down yesterday and then we gapped up today. So a little bit of an artificial top gainer, but it did go from about 28.86 all the way up to 29.72. So a little bit more than $1 here on a $30 stock. And this momentum is holding up strong. I would like to see a little bit of a sell-off and then a continuation. That would be nice. This does look a little extended at this point. We've gone all the way from 21.80 up to 29.80. Maybe if we came back down and retested this 27 zone, you could certainly argue that yesterday was your retrace and your opportunity to get back in, but I wasn't paying attention to GDX, but maybe I should be. Moving over to market indicators, starting with stocks above their 50-day moving average. Gapped up today and then sold off throughout the day, just like the major indices. You can see RSI is weak here. Momentum is to the downside still. The momentum to the downside did weaken just a little bit today, though. But it's just hard to believe at this point that this is going to stay this high. It seems like we have to have at least some kind of retrace. Even going back historically, you can see on the daily chart, every time we get up into these major zones, even for a couple of months at a time, there's a major sell-off. A couple of months at a time, sell-off. A couple of months at a time, sell-off. And even where we are right now is well above where we've been here for a while. The August high you can see was in this same zone. The next time that we were in this high was all the way back to April of 2021, and then we had this slow decline, even though the markets were going higher. So we had that kind of divergence going on. And then before that, we had December of 2020 as well as June of 2020. So times that we've been this bullish quite a while ago, and you have to expect that we're going to get some kind of a rollover, even if we do get a higher low and a continuation in this chart as well as the markets. Moving over to the dollar on the daily chart, we continue to break down as you would expect, big red bar today. Talked about it yesterday. That's what we expected. If the CPI came back lighter than expectations, which it did do, it did stall out here at this low from June of 2022. And I expect this to come down at least one more time. If the Fed comes out a little bit dovish tomorrow and they don't rock the boat too much, I would think that the dollar is going to break down a little bit and that we should expect the markets to go back up to resistance one more time before we get any kind of major breakdown. In terms of the MACD here, you can see we did turn green for just a couple of days from Friday to Monday. Of course, today that's fading out, and I would expect that negative momentum to continue here. Getting pretty oversold. This is definitely a trend here. We can't get above that 50 line to the upside on the daily chart. If this waterfalls off and comes down into this 101.50, 101.60 zone, I would expect that's where we would find some support in the dollar. And if we find some support in the dollar, then we should expect the major indices to cool down. So it kind of checks out. We have the dollar selling off, getting into that zone of a little bit stronger support after a pretty strong sell-off. The major indices coming into a zone of resistance, sitting just below those zones. And then we should expect the dollar to rally and the major indices to move down. Moving over to J&K, we did swap over to big bullish momentum here, gapped up, held above this resistance, held most of its gains throughout the day. So this is telling us that we still are in bullish conditions. RSI is getting pretty close to overbought here. So we have to respect the bullish trend that we're in. All the major indices look a little bit bullish, even with that overhead resistance. So respect the bullish trend and wait till the market gives you that signal that we are moving lower. Moving over to TLT, not a lot to say here. This has been cooling off. We've been going sideways for about 5 days now. Momentum is definitely fading on the daily chart. You have to assume that this is going to sell off. You can see momentum is fading here. We're at similar price action and the RSI is moving down as well. We did tick up for the last day or so, but if we get a break of this 9 EMA, then you would have to assume that TLT is going to come down at least into this 103.80 area. Finishing up here with the VIX on the 4-hour chart, you can see we gapped up slightly, and then we moved down throughout the day as the market digested that CPI data and pretty much stalled out similarly to where we were on Friday. I expect it to stay high at least through the FOMC meeting. We do have a little bit of a trend style thing happening here. It's not real structured and it's hard to put any tops or bottoms on this. And you can see we got pretty overbought on the RSI here, but we're right at that 50 area. It seems like this would be a solid area of support if it's going to happen. Obviously, we have to wait for Jerome Powell's comments in the FOMC meeting and that official 50-point up move in the federal funds rate. And then we'll see what happens from there. Moving over to results for the day, you can see I did pretty well, up a little bit more than 1%, $1,156, one of my better days. And my total is up to $96,207. I didn't trade at all in my IRA. Obviously, I can't day trade anything in here because it is below that $25,000 level. I do have one day trade here on my counter, so I might look to trade in here tomorrow. But on my main account, I was definitely trading quite a bit. You can see my day trades are up at 44. Today's trades was 49. You can jump into activity here. You can see I was trading in and out of the markets throughout the day quite a bit. I generally don't trade like this, and I don't think that most people should. I was really just sitting and watching, and I didn't feel like options were the way to go because the market was moving so much. And I didn't think the options were going to account for that much movement. And I also didn't really want to hold any positions going into the FOMC meeting. So I just did a bunch of little day trades, a bunch of little scalps, which turned out to be pretty successful. And then looking at positions, like I said, I have no positions going into tomorrow. I'm waiting to see what the FOMC does and waiting for the markets to give us a little bit better structure on what we're going to do. Like I mentioned, I expect the markets to continue to rally at least a little bit into that resistance based off today's reports. And I expect the FOMC to fall in line generally with that. I think they could certainly be a little bit more dovish based on this data, and that could be enough to push us through resistance. Of course, we can't ignore the resistance, but right now we are in a little bit of a bullish structure, and I lean to the bull side just slightly. Most of the trading that I did today was momentum trading based on the MACD. If you want me to do a video about that, I can definitely do that. Put it down in the comments. Otherwise, comment below what you think the markets are going to do based on the FOMC, and are we going to break out to the upside? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.